Hello and welcome to our special show, IPO KYC. We're going to get chatting with the management of Bajaj Housing Finance, one of the most anticipated IPOs. The first one from the Bajaj Group in over 3 decades. It opens on the 9th of September with a valuation of more than 58,000 crore rupees. Its AUM is nearly 1 lakh crore and the company has grown at 30% over the last 3 years with best-in-class asset quality. Joining me to talk about the way forward, we've got Sanjeev Bajaj, Chairman, Non-Executive Director, and Mr. Atul Jain, Managing Director of Bajaj Housing Finance. Gentlemen, thank you very much for joining in. And congratulations. You all started operations, I think, just 7 years back. And in a span of 7 years of starting operations, you've become the largest non-deposit taking housing finance company in terms of AUM. So congratulations. Sanjeev, my question is that if it wasn't for the RBI diktat that all upper layer housing finance companies list within September of 2025, would you have gone public right now?
Yeah, that's a very relevant question. Clearly, the RBI requirement, given our size and being in the upper layer, was to list before September 2025. But what's equally important is that while Bajaj Housing Finance is only a 7-year-old company, as you mentioned, assets as of 31st March 24 at 91,000 crore, the fastest growing housing finance company, the largest non-deposit taking housing finance company. So it becomes important to diversify our sources of borrowing as well. Our capital has all come from the parent, that is Bajaj Finance, the last 7 years. So it's a combination of size and the RBI requirement, both I would say.
So talking about size, now your balance sheet is nearly 1 lakh crore rupees, I think 97,000 as of the June quarter. Do you think the current scale and size is a hindrance for the company to continue growing at 30% that you've seen over the last couple of years?
So let me start by saying that the opportunity for housing in this country, not only because of the way the country has been growing the last decade, but also the additional focus that the government has brought in so that there is housing for all. There is a long way to go. And while we don't target any particular growth number, we've been able to see very strong growth in the last 7 years. And this is on the back of both the opportunity that exists, the capabilities that the management has built, which Atul will talk about a little bit more now, as well as the high quality performance parameters that we've been able to report quarter on quarter. But I'm sure Atul will detail more.
So do you think 30% is sustainable?
Surima, like Sanjeev called out, we do not target a particular number. Of course, the market size is very large. If you look at a housing market itself, let us say home loan market, which is the largest part of a mortgage market, the market by plus some estimates plus minus was 30 lakh crore plus as of AUM in the country. Loan against property 10 lakh crore plus. So the kind of a market size which is there, compared to that, our size, relative size of a 91,000, 97,000 crore as of a 30 June still remains small. So we have an opportunity to grow, but we are not guided by a particular number, subject to opportunity, market opportunity, and our ability to take space to the extent what we can take. Happy to get the outcome. More important and relevant part is, the market being very large is one part. This is also growing at various estimates on the industry at a 13 to 14% kind of a CAGR, which is a very high pace of a growth, and the way forward for the industry as well, given housing focus of the government in the country, given low mortgage to GDP ratio of India compared to even other economies, comparable economies, leave aside the developing economies. The highway to growth is there, not guided by a particular number.
So he's not given you a goal, say double in the next 3 years?
No, so it is not a goal on an individual to individual. We are a board-run company.
Okay.
Board decides a strategy at a point of a time. Sanjeev, of course, has a point of view as a board member. We have a deliverable to the board. As a head of a management team, I have a more deliverable as to the board and to the stakeholders at large. But the numbers are decided in context of the market position, and we don't get guided by any particular number.
Fair enough. So talking about the market position right now, has the competitive intensity come down because HDFC Limited, the giant in the space, has merged with HDFC Bank?
At this point of time, the competitive intensity is still high, and it's not only despite HDFC having merged, but if you look at the overall lending opportunity in the country, the one segment where banks would be traditional lenders in the private capex space for corporates has been slow, though we've started seeing some green shoots there the last few quarters. And in the absence of that, banks have participated in lending for homes because that is the largest retail asset class and one of the safest retail asset classes as well. So yes, so the competitive intensity continues to be there. But on the other hand, you know, what's life if there's not competition? That's what creates some fun.
Absolutely. So Atul, how will the product, you know, currently about 57-58% of your revenues come in from the home loan market. The developer finance is about 11%, but it's doubled over the last 2 or 3 years. So how will the product mix change over the next 3 years, according to you?
So Rima, the product mix is a function of two things for us. One is the regulatory requirements. There are regulations around, because we are a housing finance company, 60% of our assets has to be residential and 50% has to be individual home loan. So product mix is guided somewhat by that. And then since we are a mortgage full suite company, that means we say that we operate in each segment of the mortgage market, and within each segment we operate in each sub-segment. Basis opportunity at a point of a time, we expand. Product mix, what is looking like at a 31st March is a reflection of that. One is a regulatory requirement. So meeting the regulatory requirement at a point of a time, plus minus, whichever is the portion which has a more advantage for the company.
So which is the fastest growing product for you?
All products are reasonably growing. All products are reasonably growing. Last 2 years, of course, you called out developer construction finance has moved faster. Lease rental discounting has moved faster. That's basis an opportunity. Lease rental discounting, the country had listing of REITs in last 2-3 years, which opened up space for large players to come in. Construction finance, the industry had been doing very well. There is a space for more housing needs, and then accordingly the more need for funding of the projects, and also it acts as a funnel for our home loan business. So needs, we are market driven, we are operating in all segments within the regulatory constraint, regulatory construct, not the constraint, the construct. We'll grow the segments which is there, but in a plus minus method from where we are today.
Okay. And what about the average ticket size? Because your average ticket size is about 46 lakh, and that's much higher than the peers. And you've opted to operate in that prime segment, which is giving home loans to 50 lakh plus. So is there going to be change in that strategy? And what about affordable housing? Because you've set up a strategic business unit to cater to that.
So Rima, we are not, we don't exclude, like I said, that we are operative in all segments and all sub-segments of the market. But at a point of a time, the focus can be on a particular segment. So the focus in the past had been largely on the prime with the dominant portion of the salaried book, which is reflective of the book composition or the ticket size of the book. But we are present in whether affordable or non-prime, because there are no standard definitions. That's why I'm choosing to call non-prime whether affordable or a mass affluent. And basis the experience, basis again the risk metrics, what we see, basis the returns, risk-adjusted returns, what we see, the mix will evolve because
so how much
from
is
basis incoming
affordable
data.
today? The one which is eligible for PMAY?
Eligible for PMY, the new PMY scheme that we have seen the announcement in the newspaper, the details are yet to come out. We'll of course intend to participate with what all we can do to assist in the government, a very important initiative which is also very helpful to our industry. We'll make our strategy to penetrate much more once the scheme contours are out.
Okay. But as a percentage of your AUM, what is affordable housing? Sub 25 lakhs?
I won't have the exact specific
okay.
number right now available on that.
So Sanjeev, talking about this current IPO, it's an offer for sale of 3,000 crore rupees plus a primary capital raise of 3,560 crore. So this primary capital, fresh issue, is going to be growth capital. You're one of the fastest growing housing finance companies. So this money that you've raised is going to suffice the company for how long? When do you think next the company will need to come to the market?
Well, with the internal projections on where we are likely to be in the next couple of years, and which today I'm not at liberty to share with you, but once
so I'm
we are
glad you're going public, right?
Once we are a listed company, as I said, that thing could change, that situation will change. But we think for the next couple of years, this should suffice. And as you know, we have the requirement to dilute 25% over the next 3 years. And depending on how growth is going in the coming years, we'll take that call between primary and OFS.
Okay. So when you say couple of years, we're talking about 0 to 3, 3 to 5, more than 5?
Right now, this capital should be for the next 2 to 3 years.
2 to 3 years.
But again, as I said, it will all depend on industry growth, our growth, so I'm not trying to project anything right now.
You always think long term, right? So today, promoter stake comes down to 88%, approximately. Eventually, you will bring it down to 75%. What about thereafter? Will Bajaj Housing Finance continue to remain a subsidiary?
Our plan right now, keeping in mind that we have a very long journey before the risk of not being a subsidiary for the foreseeable future, very much so.
You use the word offer for sale also, right? When you eventually need to raise growth capital, you spoke about OFS, so that's why I asked.
Yes,
Beyond 75%, will
correct.
promoters look to sell stakes?
So the OFS is also, as we know, an additional tool available to reach the 25% in 3 years' time. So that's the reason that I talked about it, Rima. Each of these businesses, whether Bajaj Housing Finance or its parent Bajaj Finance, has grown over the years, raising capital when required. And at some point of time, your growth and the earnings from that ends up sufficing the capital requirements. So I think they still have a while to go. They're just 7 years old, but we'll see with time.
And what will Bajaj Finance do with the 3,000 crore that they're raising?
Well, Bajaj Finance is also very much a growing company, so it will continue to use that capital for future growth.